This is the Phoenix Blue update for Monday, the 5th of June, presented this morning by Tom Colley. We had disappointing non-farm pay data out on Friday. That hasn't given us clear direction in the market that we hoped. We have seen a limited sell-off in the dollar. The market still seems to expect a rate hike in June, but there's doubt now over any further rate hikes for the remainder of the year, having the market having anticipated certainly 2, if not 3, before the end of the year. But we're seeing a downturn in US data on the whole. Also this week, we need to be very aware of the UK election on Thursday, and that will obviously clearly affect the pound, but because of the Brexit EU scenario, we could also see that affecting the euro and the Swissy, so be very aware of that. And on the same day, Thursday, we have the ECB rate statement and press conference, which is something that we always need to be aware of. Okay, let's just have a look at the news and see what we saw on Friday. Other than the non-farm, we had construction PMI out for the UK, which was a strong figure at 56 against a forecast of 52. The trade balance for the Canadian economy disappointed. We then had the actual non-farm data. We were looking for a forecast of 181,000 new jobs. We actually only got 138, so we missed that target. Probably as significantly or more significantly, the previous data for April was revised down. Now, if we look for the April data here, it was released on May the 5th, but it's the data for April. What we actually saw was originally we had an announcement of a 211,000 jobs against a forecast of 194. That 211 has now been revised down to 174, effectively meaning that last month missed its target forecast as well. We can see the previous months was a big miss on that forecast. That was being treated as an anomaly. However, we are seeing a clear slowdown now in jobs creation. That may be because there simply isn't enough skilled employees or potential employees out there, but certainly cast a shadow over the US economy. We are still expecting a rate rise next week from the Fed on, I think it's the 14th, but clearly doubt going forward about future rate rises and the ability of the Fed to increase those rates. We saw average earnings coming in as per the forecast. However, again, the previous month here was revised down from 0.3 to 0.2, so a negative revision again there. The only positive data on that side was a reduction to 4.3% in the unemployment rate from 4.4. So the overall picture was disappointing. We've seen the dollar sell off. We've seen the stock markets rally on the back of that. However, that hasn't particularly given us a great deal of clarity in terms of our trading and direction for trading. We'll look at the charts in a second. Before we do that, just a look ahead to today's news. We have bank holidays significantly in Europe and Germany and France, meaning some lack of liquidity. Obviously, the UK market will be open, and that is more significant in isolation, but some reduction in liquidity this morning. 9:30 services PMI is out for the pound. That's a big number, although clearly the election this week is going to be the dominant factor for the pound itself. Then this afternoon we have ISM non-manufacturing PMI out at 3 p.m. UK time. Then overnight, before our next morning update, we have the Aussie cash rate and rate statement. We're not anticipating any variance from the current 1.5% on the Aussie. However, the statement will be of interest. The Aussie has been certainly a weak currency. There are concerns in the economy, and if you were to at this moment in time say which economy that we look at, was most likely to potentially reduce interest rates in the remainder of this year, you would have to say that would potentially be the Aussie. I'm not saying that's going to happen, but as, for instance, the US rate increases, the deviation between the Aussie rate at 1.5% and the dollar rate breaching 1% and going towards that 1.5% would mean that clearly the Aussie was losing its advantage in that respect. Okay, over to the dollar index. Well, I'm looking at the weekly chart here because there is a deal of uncertainty in this market. We can see really we've had a really long period of sell-off now. We had the Trump trade after Trump's election. We've taken out the open of and close of the night of that election. The only thing that relates to the election and any reserve of strength because of the anticipation of Trump's policies, etc., is the low point of that night. I'm looking at here at this clear zone between 96 and 96.40 is somewhere in there, being a potential turning point in this market. When we look at the euro, I've got a similar level on there, correlating between the two. We have a COT extreme signal, but that has continued to be ignored. Was effectively ignored again through non-farm on Friday. Over on the yen, we've got a level through here in conjunction with this rising trend line here. We'll be looking for a break close below, pullback to take that back to the short side, along with some additional euro strength and dollar weakness, obviously. You can see I have a number of lines in here. I've been looking for intraday entries in there, but nothing very clear today. So I will, as I say, be waiting for that significant break below that trend line before looking for a pullback and targeting this 108.15, which is the low from about April of last year. You can see there. April of this year, 2017. Getting ahead of myself there. Over on the euro, again, a weekly chart. The key level that I mentioned that I'm looking to correlate with the dollar index is this 1.1450 through here. You can see we've got multi-year touches of both tips and opens and closes. So a really significant level. We have a COT extreme signal to the short side, but following recent price action, I'm not looking for the market now to turn until we get to that 1.145 level. Over on the pound, well, it's election week. A lot of uncertainty. We've had the pound sell-off from its high. The COT extreme signal at that level has closed over the weekend. The latest data isn't showing that. And we've been somewhat ranging in here. You may remember that I said I took a trade from the bottom of the rising channel here on Thursday, I think it was, but came out of that with just a small profit, having got stops at break even ahead of non-farm payroll. So it remains to be seen what happens here. Potentially, this market has been anticipating and looking for a conservative victory. We would see the pound rise with that expectations. There's been a wobble. Jeremy Corbyn and the Labour Party have certainly been eating into the advantage. The Conservative Party have had some issues over policies and things like that, and some doubts have been raised. I think the net effect is if we get a Tory victory, we're going to see a continued sell-off anyway, on the basis that we've bought the room and we're now selling the news. I think a Labour victory or a hung parliament, which would give the Labour Party potentially the best chance of a coalition government, would see a sell-off again. Over on the Swissy, well, there's a lovely level through here that I've been watching for a while at 95.50. You can see all the significant touches down here. I am watching that. However, I will be very wary around Thursday or going into Thursday, the UK election, because of the euro and the relationship between the euro and the Swissy. We've also got the ECB statement on Thursday, so lovely level that is, and we've clearly been seeing a sell-off in this market, which is a big move on the strength, the Swissy strength, which would be a risk-off scenario, meaning money could be running to a safe haven here. We've got the same situation on the yen, and we've seen, certainly from Friday, we saw a rise in the value of gold, being another move to that risk-off scenario. That hasn't, however, been reflected in the stock exchanges, most of which have made record highs. So, to summarise, a lot happening this week with the election, the ECB, lack of clear direction in the market. We're in the summer doldrums now, so we can expect markets to range more than they have been recently. So really, it's very much be cautious, protect your capital, and only place trades when you've got those really high probability opportunities and that aren't at risk through unknown results for news events. One last thing to say, Wednesday the 14th of June, that's Wednesday next week, the next free trading event in London. If you're interested in that, either email us at info@phoenixblue.co.uk or go to the contacts page on the website. Okay guys, that's it for today. We'll speak to you again in the morning. Thank you.